today's episode, we're going to dive deep into low to no down payment home loan options, as well as strategies on how to save for a down payment. Ladies and gentlemen, boys and girls, children 18 plus. You are tuned in to the Loan Officer Podcast with me, Dustin Owen, and my main man,
JC.
John Coleman.
Yo, what's popping?
Home ownership in America's popping, John, like your collar used to be.
No one cares about owning homes.
Dude, I was training this morning, and I made fun of this kid who's way younger than we are, which that's what we do. Like, when you get up at 4:45 in the morning and you go train for an hour and a half for some triathlon competition you've recently signed up for, you become friends. You start having this thing called camaraderie, and sometimes camaraderie leads into shit talking.
Right.
So we are all talking about what was the first concert you ever went to. What was your first concert? Do you remember?
At the Big E, I think it was like Monica and like Boys to Men. It wasn't like an actual like.
Who took you?
With friends.
Okay.
I didn't even go trick or treating. I wasn't allowed to.
Show of a witness?
No, just my mom was strict and she's like, you don't need to be out in the streets.
Okay, interesting. So you got to go to a concert not because your parents took you, but because your friend's parents took you.
Concerts are trash.
Okay, well, mine was Michael Jackson. I was going into kindergarten.
Whoa. Do you have the ticket still? Do you have the stub?
Dude, I was going into kindergarten. I'm pretty sure I only got to go because I had an older sister who was going because she was going into fifth grade.
Did you know
and it was a big deal.
Did you know what was happening?
I mean, ish. I wasn't like, I was 5.
Do you remember?
Yeah, I remember it. Yeah, I remember more because I was like outside and it was dark out and it was late. But I do remember because he was transitioning from the Jackson 5 into Michael Jackson. This would have been like 1984, 1985.
I thought you were talking about the other transition, but yeah, go ahead.
Well, he did transition as well.
Multiple times.
Yeah, multiple times. It's all right. Look, fly your freak flag, John, if you got it.
Yeah.
Fly it. No, so we were talking about it in the gym this morning with my Central Florida Tri Club, and one of the kids, I don't know what we were listening to, but it was something that was like so 1998. It was probably like 98 Degrees or something, or some boy band.
Yep.
And I said, yo, Josh, I can imagine you with your like short curly hair. You're in 5th grade and you got like your collar popped and you're with your mom and your aunt and you're rocking out to 98 Degrees because it's your first concert. He said 1 collar. He goes, I had 3 collars popped.
So he was the one that wore like 3 polos underneath with different colors?
Well, so that reminded me. Did you ever do that?
No.
Okay.
I know what you're talking about. And the fact that Josh, wherever you are that you do that, don't let people know that you ever did that shit.
By the way, Josh is a badass. He's one of my favorite people.
He's in shape?
He's in great shape. Yeah, just got an amazing
what is he?
career opportunity.
20? Is he 30 years old?
He's almost 30. He's an attorney. He's been clerking for some federal judges the past 3 years of his clerking. It's like a paid internship.
I know. So basically, but he's going to be a judge. What I heard, ding, 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 no tickets, get off. Like, is that what I heard?
It's a federal judge, not a. I don't think that's more of
What's the difference? Give me Judge Judy. I don't give a shit as long as I have to pay. What you mean? Clerk, judge.
Speaking of having to pay, you know what people don't want to have to pay for?
Down closing cost. Down
payments.
Yeah.
Down payment and closing costs. Yes. Yeah, and I don't think we do enough to talk about what maybe we take for granted, right? Like here, you've been working in and around the mortgage industry for going on 5 years. Yes. I've been a mortgage lender for the past 20 years. Mm-hmm. And when we make a lot of content for sales professionals, make a lot of content for the housing and real estate industries, a ton for the mortgage industry, but we don't do enough for the people that those industries serve, and quite honestly, that we serve.
Oh, the general population, Gen Pop.
Yes, for Gen Pop. And I would love for us to start being recognized as the resource for homeowners in America. Okay. Like our YouTube channel, our Spotify, our Apple, this channel is literally the shit they didn't teach us in school, but they should have, and we're going to lean into home ownership.
If you want to reach the homeowner, Dustin, you have to talk real clickbaity and real. The sky is falling. There is no hope. Click and subscribe for more.
I hope not. But if that's what works,
I'm not doing it.
If that's what works, we may have to do it because we're about helping people. But on Instagram is a fantastic way. DM us. If you're a home buyer and you have questions, DM us. I know hundreds.
A lot of people.
I mean, I know thousands of lenders, but hundreds of good lenders. Yeah. Like I know thousands, but I know hundreds of good lenders all across the U.S. that will take care of. I mean, like hook people up, give them the advice they need, help them with the pre-approval. Say, just reach out to us, and at no charge, We will answer your basic questions. We'll get you pointed in the right direction and make sure that you get aligned with what I would call a TLOP approved.
Good for you, Dustin.
TLOP approved mortgage lender, right? I think that's our next progression that we take. So the conversation came up. I was talking to this guy, Mike, and you know Mike, and shout out to Mike for this suggestion. He's like, Dustin, believe it or not, there's not enough content about what people need to do to save money for their down payment. I'm like, what do you mean they got to save money? He's like, no, but how? I'm like, I got to teach people how to save money. He's like, dude, you know it better than most.
Yeah, you do.
I was like, all right, well, let's talk about it. And then same conversation, same breath. He goes, also, people think they have to put like 20% down to buy a house. I'm like, get the out of here.
Yeah.
Shut the front door. Like, no, they don't. Like, he goes, they still do. He's like, I just saw this study coming out of Lending Tree and 73% of people polled, whatever the hell that means. I'm like, so y'all, look, I'm looking at the camera for this one. You do not have to put down 20% to purchase a primary residence. Now, by the way, you may have to put down 20% to buy an investment property. You may have to put down 20% to buy a commercial property. You may have to put down 20% to purchase a vacation home. But if we're talking about a primary home, there are plenty of low to no down payment options. And there are various strategies and tactics to help people save for their down payment. And this may be one of the quickest episodes, which we're going to have to do because the attention span of the home buyer may be a lot less of attention span than the housing and mortgage professionals that we serve.
That is very true.
So I'm going to jump right into it. Just kind of spitball, rapid fire. Let's have at it. Okay. If you want to put zero money down and purchase a home, and it's going to be your primary home, you can do so. If you're an active duty military or you're a qualified veteran, a VA home loan allows 100% financing. That means 0% down. They allow it to loan amounts well over $1 million. And you are allowed to actually have multiple VA home loans. And that's a myth. People are like, oh, I already used my VA. I'm like, nope, you can use it again. You can use it again. As long as you have eligibility, that is a fantastic loan program that requires no money down. Now, if you're not a veteran and you're not active duty, it doesn't matter who you know. It doesn't matter which of your family members served and whether or not they're decorated or not, you can't use someone else's benefits.
Like Gronk says in those commercials, the USDA commercials.
Shout out to Gronk, right? When was the last time y'all hung out? A couple years ago?
Since he retired.
Since he retired, it's been a minute.
It's been a while.
So when I'm looking at a VA home loan and someone's like, hey, how do I get me one of those? I'm like, yeah, go serve our country.
Question. So when people like register from the armed services, is that something they're like taught? Like, have you met like people that have served and are veterans that didn't know this? Like,
I think most people who serve, they understand their benefits. GI Bill, VA home loan benefits. Like, God forbid, we all know those spouses love themselves some TRICARE, right? That TRICARE insurance, man. You can get your hands on that. Yeah. That's the best insurance going. Yeah. It puts Aetna, Blue Shield, Blue Cross, all of it to shame, right? There's a certain extent that they do know, but yeah, there's always the, well, I'm a veteran. I'm like, yeah, but you have a 480 credit score. But I'm a veteran. I'm like, yeah, but you have no job. Like, you still have to qualify for the home loan. Right. Okay, like that's like a myth. And we've done years ago an entire episode just on VA home loans. And it was actually a guest who is a VA home loan expert. Shout out to Don Hoffman up in Destin, Florida. And this was probably now going on 2 years, but that is a 100% financing option. Okay. USDA, United States Department of Agriculture, they have a home loan. Again, 100% financing. Now, there's some geographic restrictions because they're going to want home buyers to be in rural areas. And there's a whole entire map that you could Google USDA rural housing map, and you could see if a property address was or was not in that particular area. But USDA is a pretty simple, easy to originate, pretty basic 100% financing option. And then various lenders, depending on the bank, the credit union, the lender, they have their own 100% financing option. Like, I work at a mortgage company. We have two different 100% financing options. One is called the Wealth Builder and one is called the Powerhouse 300. Like, those are our product that we fund, that our bank who owns us services, and a mortgage insurance company insures for us. So they have their underwriting guidelines, they have their criteria, but those are some unique 100% financing options. And then there's various low down payment options. One of my favorite ones that no one talks about, we could totally make a reel about this, would be, there's a thing called the HUD 100. Okay, so if you are buying a house where the seller is HUD, right? The Department of Housing and Urban Development, that's where FHA was spun out of HUD. So it's basically a homeowner went into foreclosure. That homeowner had an FHA loan on their home. FHA had to foreclose on the property. Now they are the rightful and legal owner, and they're selling that property. A HUD 100 lets you put $100 down. And as long as you're getting another FHA loan to purchase this home that is being sold by HUD, whose old owner had an FHA loan on it, you can do what's called a HUD 100. And that's a product that we don't really talk about a whole lot. And maybe that's because there's not that many foreclosures on the market the way there were 15 years ago. Okay. Then you have various down payment assistance. I mean, various. There's down payment assistance for people with really low income. I'm talking like 80% of the area median income, right? So if area median income is like 60 grand in your market, you're talking your income is $48,000 or less. If area median income is 50 grand in your market, like you're talking about $40,000. Yeah, so very low income, but you could qualify. But then there's other down payment assistance that's a lot easier to qualify for. Like in the state of Florida, they have the Hometown Heroes program. Woo-wee. Like that's a down payment assistance option for home buyers that, hey, now it's not free money, but usually the down payment assistance means, hey, here's money. You get to hold it. You most likely don't have to make a payment on it. But when you sell the home, you're probably going to pay us back that money. So cool. It was like a loan with no payment, no interest. Sure. That's what it was. And then certain programs, then this is all state specific, county specific. I mean, there are thousands of down payment assistance programs across the United States. And some of them are easy to be eligible and qualify for. Some of them are more restrictive and more difficult. Some of them funds are readily available. Some of them funds run out. Some of them, once you see the terms, you're like, yeah, I'd rather come up with my own down payment, right? But anyhow, there are some where if you live in the home long enough, they'll forgive that second mortgage, that down payment assistance, which by the way, I called it a second mortgage because technically 99 times out of 100, when you're getting down payment assistance, it ain't free money. There is a debt tied to it. It is a second mortgage or a second lien, but it's money that you didn't have to raise on your own. And it's money that you don't have to necessarily make payments on. Okay, so like those options are readily available. And any good lender can walk you through all of the down payment assistance options. Any good lender can walk you through all of the no down payment options that you're available or that are available to you. And if you need a good lender, dude, let us know. We'll hook you up. Like drop us a DM, find me on LinkedIn, first name Dustin, last name Owen. I'm that dude that has like 25,000 connections. You'll see me, pasty pale, bald head. And shoot me a message on LinkedIn and be like, hey, Dio, listen to your podcast. Would love you to recommend a great lender. I'm in this city and this state. There you go. Right? I'll hook you up. It's literally my pleasure to do it. Or you can slide into our DMs over at Instagram. We'll do the same exact thing for you. All right? Yeah. So now how people are having success saving for down payment.
Eat ramen all day, every day. Don't go out the house. Cut off your cable bill. Put your heat and AC at 83 degrees at all times of the year. And you should be okay.
And on that note, I guess we're done. Mic drop moment. We can
what do you keep your AC on?
Dude, I keep my AC 76 with no one home.
You're crazy.
74 with people home. 73 when it's time to go to bed.
Guess what my electric bill was last month, Dustin? Now, we're getting into the summer months. Guess what my electric bill was?
In Central Florida.
Yes.
$87.
Yes. It was exactly $86.97.
That's crazy.
That's with the $20, like the $10 fee for because I got one of those like circuit breakers outside, like attached to the house. So that's with like a $10 upcharge. So technically it was only like $70. I've got it now to where we can like withstand.
Do you not have a refrigerator? Do you not run a computer?
We do, yeah. But I turn if I'm not in the room, the lights are off. The other day, I got the temperature up to my birth year, 85 degrees in the house, door open, hearing the crickets, fan on.
That's gross. We only do that during hurricanes, John. We only do that because hurricanes force us to do it.
I'm trying to give people tips on how they can save for home ownership.
Yeah, you have issues. Yeah, you're a sadist. You're a masochist.
What do you keep it in the winter?
You're a masochist.
What do you keep it in the wintertime?
We don't turn the heat on ever.
Oh, okay.
Yeah, sometimes my wife's like, oh, I feel bad about...
It's like 67. Sometimes you wake up in Florida, it'll be like 66 degrees in the house.
Yeah, I'll be 54 in the house. Put a blanket on. Put on a parka.
Okay.
Yeah, we don't turn on the heat ever.
Right.
That's like... Sometimes my wife's like, oh, there's babies sleeping upstairs. I'm like, who cares? Swaddle them. All right, we digress. If people don't want to hear us talk about the
fine.
weather in Florida and where John keeps his electric bill, but you did get some great suggestions on what people could do to potentially spend less so they could save more. And that's what I want to talk about. I kind of want to cover 5 or 6 tips, tricks, tactics, proven methods
Please.
for people to actually save the money necessary. Because here's the deal. When you buy a house, even if you're doing 100% financing options, there's still closing costs.
Yeah.
Now, yes, you can sometimes negotiate with the seller to pay your closing costs, but sometimes you can't.
Mm-hmm.
And closing costs are typically, here's a rule of thumb, 3% of the purchase price. So if you're buying a $300,000 house, they could be $9,000. Buying a $400,000 house, they could be $12,000. Those are lender fees, title fees, government fees, real estate taxes, homeowners insurance, surveys, appraisals, etc. Credit report fees, like those are the cost. So even if you're doing 100% financing, you may very well need to come up with closing costs.
Mm-hmm.
So what are some ways that we have found and we have taught? I mean, I've personally helped fund over 2,000 loans over my career. So I've seen a thing or two. Here's what I find that people do. The first and the easiest is actually to borrow against your 401k. If you are fortunate enough to be diligent enough that you invest and take advantage of your company's 401k, a 401k is a great way for you to go borrow your own money and pay yourself back, and lenders actually allow you to use that money for down payment and closing costs. Because you see, you can't go borrow money from a credit card. Mm-hmm. You can't go borrow money from a bank and use that unsecured loan for your down payment and closing costs. There's actually rules against that when it comes to lending and qualifying for lending. So a 401k loan is by far one of the easiest. Second easiest, and this doesn't apply all times of year and to all people, but for those people who are used to getting a big fat income tax refund every March or April, that's a great way to have a large chunk of money to go towards your down payment and or your closing costs. Now, these other ways, these are more hacks, right? These are more, hey, it's going to take a little bit of effort. It's going to take a little bit of work, a little bit of sacrifice. The first one, get a side hustle, y'all. Like, I was 23 years old, college graduate, working my first professional job in Atlanta, Georgia. I valeted cars for a year. Because I asked my girlfriend to marry me. She said yes. What a fool she was. But she said yes, and we were saving for a wedding because we had a badass wedding. Open bar, DJ, 200 people.
You ever take
sit
stuff?
Down dinner.
You ever take stuff from people's consoles? Like if there's like $100 bill like sticking out of the car, you're like,
Never. Would never do that.
Still looking for a pair of Gucci shades I had in my. That was at the car wash. That's to be expected. Anyway.
Okay, but yeah, no. I honestly,
Good for you.
I couldn't. There's many things I've done, especially as a juvenile. At this point, I was 23 years old. My brain was almost fully developed, John.
Really?
You want to talk about my 16 or 17-year-old brain? We have different stories.
Yeah, don't worry about the money in the dashboard. The whole car's not coming back.
Yeah, I tell you what, I did learn how to do on other people's cars.
What?
Parallel park. Ooh. Yeah, I got really good at parallel parking in a dark parking lot in the back of a Maggiano's in Atlanta, Georgia.
Shout out Maggiano's.
Yeah. So, but no, side hustles, a bar back, you drop shipping, babysitting. Like there's things that we can do.
People got a full-time job, Dustin. They don't want to take on another job to make more money so they can afford a house. They want to get a raise at the job they're at.
Well, John, that's going to be number 2. So first one, we pick up a side hustle. It's temporary, right? It's temporary. Think about what you're trying to do. As I kicked off with this episode, you're trying to become a wealthier person. Mm-hmm. You're trying to live the American dream. We do so via home ownership. Okay. There's programs out there to allow you to enter into home ownership with little to no money down. So yes, the side hustle, it works. I know it's not what you want to hear. Mm-hmm. It's kind of like someone say, hey, how do I get healthy and lose weight? And I'm like, I don't know, eat healthier, like go to the gym, sweat more.
Yeah.
That doesn't sound fun.
Nope.
Is there a shot? I'm like, yeah, there is. Does it come with side effects? Maybe. Good enough answer. Give me the shot. Yeah. It's like, but the old school way is just no, let's eat less, let's eat healthier, and let's exercise more and let's sweat more and work a little harder and we'll be healthy, we'll lose weight. So if you want to become fiscally healthy, right? You want to become stronger financially. Yeah, a little bit of sacrifice. That would be a side hustle. Number 2, you may be able to raise more money just by getting a raise at work, but you don't get what you don't ask for. So you may have to sit down with your boss and talk about your career plans, talk about the value you bring to the organization. Mm-hmm. And if you truly do bring value and they want to keep you around, let them pay you for it. And then all of a sudden you're making an extra $100 a week, an extra $400 a month, After taxes, maybe it's $350. After a year, you have almost $5,000 saved just by getting a raise. Now imagine if you coupled and stacked. Right? We did an episode a couple about stacking those wins. What if you stacked a couple of these wins on top of each other? Right. Be a quick way to get 10 or 12 grand. And 10 or 12 grand may be enough for the 3% down payment you need, because maybe you didn't qualify for a 100% financing option, but you're able to qualify for a 97 or a 96.5% financing. And you're able to come up with the down payment money, but then you got the seller to pay your closing costs. By the way, we do this. We do this in lending. We do this in housing all the time. So you don't need to necessarily always come up with down payment plus closing costs. You may be able to come up with nothing. 100% financing, seller pays closing costs. You may do 100% financing, but you have to pay your own closing costs. You may come up with the 3 or 3.5% down, but the seller pays closing costs. So you get 10, 12, 15 grand saved. That may be all you need. And if it's not in the 401k and you're not getting it in the IRS tax refund, and you don't want to do a side hustle, then your next step would be to go and work on getting a raise, get paid more to do what you're currently doing is definitely something we can do. And then you joked about it, but I'm serious when I share this part, a little bit of sacrifice, right? If we're going like 5 ways to save money for your down payment and closing costs, sacrifice is going to play into this. And by sacrifice, here's what I've learned. I love to go out to dinner. It's my Friday night thing to do. It's my time with my wife. It's my time with my family. Right? It's kind of like our Friday thing. And sometimes we're not going anywhere fancy. We go to a local Mexican place and we get the same dish.
Shout out Habaneros.
Shout out to Habaneros. But I know if I went to Habaneros and I didn't order the tableside guac, I saved $15. It's $18 when you include tax and tip. Okay?
Yeah.
I know that if my wife didn't order her sangria, and I didn't order my sangarita, that saves another $24, $30 when you include tax and tip.
Right.
So my kids can still get their Dr. Pepper, right? We can still get chips and salsa and maybe even splurge for the queso because that's not that expensive. But just by eliminating tableside guac, a drink for her and a drink for me, we just saved ourselves $50. That's a week. $50 a week. That's what is that? $2,500 a year?
I guess.
And that's just one meal out on a Friday.
I know.
So you start talking about stacking. It's not as hard as you may think if you're trying to save $15,000. If you deployed 3 or 4 of these strategies and you tacked them all together. And if you just understood and you knew home ownership for many of you is within reach. You just don't know it. You haven't explored it. You haven't thought big enough, and you haven't talked to the right people. We're here to say you can talk to the right people. We have access to the right people. Let us know how we can hook you up with the right professional to answer your questions and hopefully put together a game plan for you. John, that's all I had prepared for today's episode.
Good.
Yeah. On that note, here's what we're going to do. If you like what we're doing, please make sure you're tuned into our YouTube channel. Make sure you subscribe and share this with somebody that you think will benefit from this type of content. We are all over social, whether it's TikTok, whether it's Instagram, whether it's Facebook. We are at the Loan Officer Podcast. And let us know how we can help you. But his name's John Coleman. My name is Dustin Owen. That is all the time we have for you today. We do look forward to catching you on the next episode.